The Tie and Hoodie Show is sponsored by ICCLending.com. For real estate service, please go to ICCLending.com.
3, 2, 1.
Every human came to earth with a gift, and they must discover that gift and refine that gift for them to be fulfilled.
The prerequisite for spending time with any person is that they nourish and inspire you. They feed your flame.
Yo, hey man, how you work this radio?
You're not listening to the Tie and Hoodie Show.
Keep it locked.
Owning a home and paying it off is one of the data points of an everyday millionaire.
Home sales across the U.S. are on the rise as buyers take advantage of record low mortgage rates.
Good morning. Now let's get back to the Tie and Hoodie Show.
Good morning, K-Day listeners. It's a beautiful Sunday, and you're right here with the Tie and Hoodie Show. It's always our pleasure to be right here with you, 6:30 a.m. to 7 a.m. every Sunday morning. I'm your host, Trevon Smith, along with my co-host, the one and only Andrew Jessicoba.
How are you guys? Good morning. It's another Sunday morning. I'm excited for our guest today. I'm excited. Well, before I get to our guest, how are you doing, Trevon?
I'm doing good. I appreciate you asking. Anytime we can get here and spread the positivity, and I'm always a student on Sunday morning. I'm always interested in learning. I take a pleasure in it, as well as I hope our listeners do.
Yes, and we do. I mean, we're still in quarantine. The vaccines are going on.
I got my first shot.
You got your first shot?
Yeah. Moderna. So my second shot is in 2 weeks.
In 2 weeks?
Yeah.
So you didn't throw up, fall down, die, and you didn't pass out.
I actually didn't have any symptoms. So
no symptoms.
No symptoms at all. So
that's good. I mean, we're encouraging everybody to try and get the vaccine because it'll get us back to normal, hopefully, right?
Yes.
So
sir.
Yes, today, yeah. Go ahead and introduce our guest today.
Our first guest, today, I'm always interested. He's a financial strategist. He does have his own podcast. If you check out our YouTube channel, he has all his information up there as well as we'll be giving it out. He also, specializes in life insurance, and something I'm very interested in is helping show people to pay their mortgages off sooner than later. With all due respect, and I can't wait to pick this man's brain. It's the one and only Mr. John Perrings from up north in Northern California, correct?
Hey guys, yeah, the John Perrings here. We live in Walnut Creek, California. My office is in Oakland, California,
okay.
And it's great to be with you guys. Andrew and I have a few clients in common, so we've been talking for a little while, and so it's great to finally get to kind of see face to face and have a conversation with you. And hopefully we can, provide some really helpful information to your listeners today as well.
That's definitely the plan, and we're gonna send them your way.
Okay, sounds good.
If you don't mind, just go ahead and give us a little. I always like to pick people's brains and see exactly where they came from and how did they end up in the situation you're currently in.
Yeah, I'll give you a little bit about my background. So I'll start where I'm from. I'm actually from Springfield, Illinois, kind of a smaller town in Illinois. I grew up there, went to college there, and the reason I'm starting that far back is it actually ties into sort of one of the first lessons that I try to relay to some of my clients. I moved from Illinois to San Francisco in the late 90s. I went to college. I was a bio and chem major, biology and chemistry. I was planning on going to dental school. And so when I came out to San Francisco, there was this whole, burgeoning tech industry happening called the .com bubble that I didn't even know about because I wasn't involved in that at all. And, so that was kind of my first point in life where some options became available to me, and I decided to get into tech. So I kind of dropped the bio and chemistry and dental school thing, and I was in the tech industry for 20 years. I had a 20-year career in Silicon Valley doing cloud-based startups, and then I actually got into data centers. So I was doing, that's actually where I first got into finance. I was doing data center real estate and finance. So I was doing specialized industrial real estate transactions for data centers, which are the actual infrastructure of the cloud, quote unquote. Mm-hmm. And I got into construction. And then in my personal life at that same time, I was a little bit of a financial disaster, you could say. Over that 20 years and 2 popped bubbles, I couldn't help but notice that the typical kind of financial advice that were provided by, the financial planning industry and our HR departments, it's not really designed, in my opinion, to really work in our favor and handle all the different things that can happen all along the way. So, I had 2 pop bubbles, had to liquidate my 401k twice, all these different things that were kind of happening throughout my life. And I was just thinking, there's got to be a better way. And so I really went on a tear to kind of apply the economics that I knew, as well as the finance from the real estate side, and how can I create more of a personal finance strategy to make that happen. And so as I was implementing that in my own life, strongly focused around a core of guaranteed life insurance, I became so passionate about it, I decided to take what I knew from my world in data center finance and move that over into financial strategies for everyday folks like you and me. So now what I do is I have a financial practice called StackedLife, and what we do is help people with financial strategies that allow them to eliminate debt, permanently reduce tax, and increase their spendable income in all stages of their financial life. And so because of my background, I end up working with a lot of Silicon Valley tech folks, a lot of business owners, and a lot of real estate investors. And so that's kind of what I'm doing in a nutshell.
Okay.
Well, I mean, that's a big intro, and I'm grateful for that. That's something that people need to know where you're coming from so they can really understand why you're passionate about what you do right now. So when people see you, I mean, the normal thought process is, oh, look, he's doing so well. He must have been handed the golden spoon. They didn't understand that you had worked really hard to get to this point, and it was through personal perseverance that you stumbled into, you know what, I need to take matters into my own hands, which you did. And fast forward today, you're an expert in financial strategies. Our listeners are listening today and they're thinking, financial strategies, what is that? What the heck is that? Can you dive a little deeper just to kind of numb it down to every other folks who's making, $30 an hour, $40 an hour, $50 an hour? Can you numb it down a little bit?
$20 an hour too.
Yeah, and by the way, it doesn't even really matter that much if you're making $20 an hour, $8 an hour, or $200 an hour.
Mm-hmm.
Money kind of works the same way for everybody, and that's the good news. I like that. Yeah, and unfortunately, most of us just don't get educated on money. We're not really taught in school, how that works. And so it's hard to give a one size fits all answer, because the answer actually creates more questions. And so, but let's start here. If you look at most people's financial lives in America today, for every dollar that comes in, if you add it all up, if you add up federal tax, state tax, sometimes city tax. I lived in New York for a little while, had a city tax, your cell phone tax, your hotel tax, your gas tax. It's very easy to come to a comfortable conservative number that about 40 cents of every dollar that comes into our financial life leaves our financial life in the form of taxes, right? And then on top of that, if you take in, because 40% goes to taxes, and then we have lifestyle expenses, and then we try to invest a little bit, when we do need money, a lot of times we have to go to outside sources of money to get the money. So mortgages, for instance, car payments. And if you add up all of that, there's research out there that shows that about 25 to 35% of every dollar that we make leaves our financial system in order to pay for debt service. Okay. So if we just use a conservative, let's say that's 65% of our money, right? And then, we have our lifestyle spending, let's say that's 25%. And then a lot of people will say, hey, you should take 10% of everything you make and invest that, make sure you save and invest that. But really, when we do that investing of that 10%, where does that go? It goes to the 401k plan managers, goes to the brokerage houses, the people that want to deal with your money with assets under their management. And so if you look at it from that view, 100% of our money is under someone else's control. Follow me? And if we take a look at that, if we also take a look at the amount that we're actually investing compared to what's being spent on taxes and debt, it's very lopsided. And so what I've found is most people are literally losing hundreds of thousands of dollars or more due to some of these things that I just mentioned: taxes, interest, the lost opportunity cost on all of those. Hundreds of thousands of dollars or more just gone, slipping through their fingers, even when their financial plans are working the way they hope they will. And so what I'm talking about with financial strategies is how can we structure, so the name of my company is StackedLife. If we look at our assets and if we create a stack out of those assets, how could we align those assets so that they work together to make more in sum, rather than having them kind of interspersed? It's almost like a financial junk drawer. Most people just kind of have investments here and there. They make different decisions for different reasons at different times. How can we line that up to make everything work and kind of assist everything all along the way, so that we have more when we get to either retirement or passing along to the next generation? So that's really kind of the broad strokes of what I try to do to help people.
And if you're tuned in right now, it's the Time Hoodie Show right here on 93.5 KD. We're talking to Mr. John Perrings, financial strategist. And some people may have a lot of questions. Just go to our YouTube page and write the questions, and actually, and tag Mr. John Perrings, and I'm pretty sure he can help you out as far as that. But we do want to send you to his direction. But my question is, let's say we have just the average listener, maybe about $40,000, $50,000 a year. How can somebody listening wants, they watch Fox and they watch CNN and they watch all these business shows, and they want to get involved in having a strategy for their future. Like what's some things that we could talk to them about, as far as like sitting down and contacting you, and how we can go about helping them, and even in planning their life, if they're even strategizing for their future, even if they're doing week-to-week paychecks or maybe month to month.
Yeah, I mean, I think a lot of it gets back to how much of your financial life can you bring back under your control and use. And so I've been listening to the podcast, and you had a guest on, I think it was episode 6, Andre Hall, and he was saying some really great stuff. And I know he works with Ed Slott, and mentioned some great things about him. And Ed Slott's a big fan of life insurance as well. And he talks about it like I like to talk about it. He does kind of call it an investment sometimes, which I don't agree with, but he also talks about it as a savings account. And so where can we put our money so that it does more than just one thing for us at any given time? Right. And so there's a great book out there called Becoming Your Own Banker by R. Nelson Nash. It's Becoming Your Own Banker, Unlocking the Infinite Banking Concept. And what he talks about in that book is pretty groundbreaking, where it talks about using life insurance as a tool to perform more than one financial function at the same time. Okay. And so what ends up happening for a lot of people is, let's say they're more, to use your example, they're making 40, 50,000 a year, whatever the number is. If they're doing that thing where they're saving money, a lot of times they're taking that money and putting it into some kind of qualified retirement plan. And when you do that, and by the way, I'm not bashing qualified retirement plans, but there are ways to kind of strategically use them, where if that's the only thing you're doing, which is what I find a lot of times, a lot of people only take money and they only save it in these qualified retirement plans because they think they get a tax break. All of a sudden we've separated ourselves from our capital for 10, 20, 30 years, 40 years. If you're like an 18-year-old, going out there and starting work, all of a sudden now we're forced to go to outside lenders when we need money, and that's where the debt service starts getting away from us. By the way, I'm not saying don't use debt. There are definitely smart ways to use debt.
This is great info.
Yeah.
This is great info.
Yeah. And so the infinite banking concept is one of the things that I focus on, where we can start to create our own sources of capital so that we can use our money now. It's not locked away. We can use our money now, and it creates a source of income for us in retirement. So we can use that money all along the way, and it creates some very powerful benefits later on in retirement. And then you combine that, when you combine it with things like qualified plans, all of a sudden, where you can get a little higher rate of return and some other investments. If you can combine life insurance with those types of other investments, you can create a very powerful outcome, 20, 30, 40, 50 years down the road.
Gotcha.
Well, I mean, Mr. John, so, I'm originally from Africa, Nigeria, right?
Mm-hmm.
I mean, I say that a lot on the show because I need people to understand my mindset and my thought process. Where I'm from, if you have life insurance, it's almost like you put a bounty on you. It's almost like a death wish, Like, so I have a life insurance now for about $1 million. Then I'm sort of like telling my wife to say, well, honey, you can go ahead and kill me and take the money. How will you educate people that life insurance, especially in the, African-American, Latino community, minority communities, how will we educate them that life insurance is a solid financial tool?
It's a necessity.
It's a necessity. Yeah. Because I've been here for 20 plus years. I've come to understand now that it's a necessity. I have life insurance, but a lot of people in the Black and brown community, they don't understand the necessity or what it means to have life insurance or what it's used for. They just think, okay, let me work and have my retirement. Retirement to them is 401k.
Yeah.
Yes.
That's what most people think.
Yep.
And they don't understand that life insurance is a powerful tool that you can use. Can you expand on that for a little bit?
Yeah, of course. So first of all, I think I would say that the Black and brown communities are starting to realize that this is a powerful asset. So I would say that that's changing a little bit as we speak. But secondly, I think a really important way to look at it. I'm sure you guys have probably read the book Rich Dad Poor Dad by Robert Kiyosaki.
Mm-hmm.
It's probably the #1 personal finance book out there. Well, in that book, he talks about how rich people buy assets and poor people, the poor and middle class, buy liabilities, right?
Mm-hmm.
And so if we understand that there are specialized life insurance policies that are actually assets, where the premium payments, every premium payment you make goes towards building that asset, all of a sudden, the life insurance discussion is less about the cost of life insurance, and it's more about just creating another asset in your financial life. And that might be the simplest way to look at it, where as long as you can qualify for it with your health, it's a tool that can be used to create, number one, create your first asset, which is your capital asset. And just to clarify that a little bit, what I'm talking about is cash value life insurance that has a guaranteed cash value. It's really very much like a savings account, but you'll earn 2 to 40 times more than what you do in your typical big bank. Once you have that cash asset, you can start buying other assets, and then it snowballs from there. But the first thing we have to do is just save money. And where can you save money where you don't actually separate yourself from it? You still have the use and control, as well as guarantees. I think one of the worst things that's happened is, the retirement planning community calls retirement plans retirement savings plans. Well, newsflash, a savings account doesn't have risk. And so these retirement quote unquote savings plans are all risk-based tools that have money in the market. You can lose money in them. So there's nothing saving about that. Where do we put our actual true savings, which is where we should start? Do you have an emergency fund? Number one, like how do we set that up? Life insurance, a great tool for an emergency fund. You can save up cash value and create that as your emergency fund. And then once you have an emergency fund, do you have an opportunity fund? How do you take advantage of opportunities that might come your way? Where, I was listening to another guest you had on that I really liked what he was saying, Anthony Nguyen. who's a house flipper, what if you come across a great deal on a house that only you know about? You can get access to it before it hits the market. Do you have the money to take advantage of that? Do you have the capital, right? And so these are the types of things that we want to start looking at before we go in and just dump money into the stock market blindly through these retirement plans, where we can lose. You can lose everything. I mean, it's really based on the timing of the market in terms of what happens. So I don't know if that answers your question. I might have gone down a rabbit hole.
Yeah, it does. It does. It's just the idea of, trying to have our listeners understand that life insurance is a solid tool and it's a safe tool to put money into. And one thing I probably wanted to address real quick is how early can somebody have life insurance? Can I have life insurance for my 5-year-old son? Or can somebody have to be 20, 21? Do they have to be in college? What's the age range,
Yeah, and I'll answer that question, and then I'll talk about real quickly how that actually ties into what life insurance can do for somebody. There's really 4 areas, but so to answer your question is you have to essentially be earning an income. So what the insurance companies will do is there's precedent for this calculation for over 150 years. What they do is they look at what's called your human economic value. And they'll say, if you're 40 years old and you're going to work till age 65, they'll say, okay, how much are you earning? It's $100,000 a year. They'll take $100,000 times 35, that's $3.5 million. And that's what the insurance companies will insure you for. That's just a simple back of the napkin. There's other ways to do it. But as a child, they don't really have a human economic value yet, but you can get insurance on them. The parent just has to buy that for them. And there are limits to how much you can buy for a child. And the other thing that has to happen is the parent also has to be insured.
Okay.
No, it definitely answered the question, because I don't think a lot of people have access to this kind of information, because most people just don't go Google life insurance or whatnot, unfortunately. And when they do it, it's too late, or it's close to being too late. I went to the website, and I like one of the things that you point out. It says, take advantage of the economy instead of reacting to it. I wanted you to talk a little bit about paying off your house sooner than later. If you could walk through, us through that. I've been fortunate to pay off my house sooner than later. Andrew's taught me that. But just for our listeners, and if you don't mind, just going in and talking about a little bit about your podcast and what do we expect out of that?
Yeah. So regarding house payments, I'm actually going to differ from what you just said a little bit. Hopefully that's okay.
Yeah.
I actually think it's economically better to not pay off your house early, depending on your interest rate. I can show you with math that if you're going to make extra payments towards your principal, right? So normally people pay off their house by making additional principal payments, right? So when you do that, you do decrease the amount of total interest you're going to pay on that mortgage. That is true.
Yes.
But if right now with these crazy low interest rates, let's just say you got a mortgage at 3%. Well, for example, if I could make 4% in a life insurance policy, if I could make 4%, it actually does not make sense for me to allocate those extra dollars over and above my mortgage payment to pay down 3% debt. I'm basically giving that a 3% job when it could be doing a 4% job over here in life insurance. And so, and then, if you look at the strategic kind of, or the tactical, what's happening with a mortgage, are you better off with a higher mortgage payment and no savings, or a lower mortgage payment and a bunch of savings, right? As you move through the years, I think I could make the argument that you'd be better off not making those additional payments to the bank, someone else's financial system, and instead taking those extra dollars and putting it towards your own financial system and creating more financial stability for you. And by the way, when you do that, if you let's take a $500,000 mortgage, for example, at 3%. If you compared that to a 15-year mortgage at, say, 2.75%, these are getting into crazy low interest rates. But if you actually did the 30-year mortgage and applied the additional dollars that you would have paid for a 15-year mortgage into life insurance, you'd come out at 30 years, you'd come out $100,000 ahead. So that's just a very simple example of what I said earlier, where people are letting hundreds of thousands of dollars get away from them over the course of their financial life. Well, there's $100,000 right there. And that's just one house. So lots of things that can be done to make people's financial lives more stable and have more money, right? So that's one example.
And that's why they need to contact you. Yeah. Can you give them the information, website, phone number, anything you want to give them?
Yeah, you can just go to my website. It's StackedLife.com. It's like I just stacked some things on top of each other. StackedLife.com. You can find me on LinkedIn if you like that, John Perrings. And hopefully this is okay, but on the front page of my website, I actually have an online course on whole life insurance that if anyone's interested, it's really like a soup to nuts course on whole life and everything you need to know about it. So for your listeners, if they'd like to go and check that out, you can just go right to my website. It's right there on the front. And if you want to buy it, you can get half off if you use the code Hoodie. Because I'm resonating more with the hoodie side of at least from clothes, at least from a clothes perspective.
Appreciate it. I appreciate it.
All right. Yeah. So I mean, let's in about quick 2 minutes, because we don't have that much time. Why should somebody buy a whole life compared to a term life insurance? Because a lot of people say buy term and invest the rest. Some other people say buy whole life and enjoy the cash value savings down the road. What's your opinion on that?
Yeah, it's one of the most hotly contested things in the financial services industry. I mean, there's a lot of people that kind of go back and forth on that. I think it really just comes down to a couple of things. We talked about, rich dad, poor dad. The rich buy assets, the poor and middle class buy liabilities. Term insurance is a liability. It's a payment that you don't get anything for unless you die. And the reality is less than 1% of people, less than 1% of term insurance policy actually pay a claim. So by the way, I sell a lot of term insurance. I think it's very important, but it is a true liability. It's a true cost, right? Whole life insurance, on the other hand, people look at the premium amounts, and because they are higher, they think it costs more. But this gets back to Ed Slott. Like he talked about, if you had a place to put money that earned a respectable rate of return, was tax deferred, could be accessed tax-free, and guaranteed to pay out at the end of everything a tax-free death benefit, would you want to put as little money there as possible or as much as you could? And that's really the idea behind whole life insurance, where if you think of it as you're actually creating a savings account, like when you put money in your savings account, are you like, hey, I don't want to put too much money in here because I don't want my payment into my savings account to be too high. No, we put as much money as we can into our savings account. And that's exactly what we're doing with whole life insurance. I think, the buy term invest the difference, people kind of miss that, because by the way, you can use that cash all along the way for the next 20, 30, 40, 50, 60 years. These whole life insurance policies are designed to last to age 121. And so they're guaranteed to pay out when you die, not if you die. So there's a huge difference between a guaranteed future cash flow and a possible cash flow, because when you have a guaranteed future cash flow, not only does it create value for your heirs, but it creates tons of value for you while you're still alive, believe it or not. And so that's some of the things that we can get into, when talking about, privatized wealth strategies.
Mr. Perrings, we definitely want to thank you for your time today, for checking in with us and our K-Day listening.
Yeah. Great to be with you guys.
No, it's definitely a pleasure. You can check him out at StackedLife.com, StackedLife.com. If you missed any of this information, you can check it out on the TyHoodieShow.com and go to the YouTube page. We definitely appreciate your time. Go check him out. Learn about life insurance and financial strategy. It's never too late to put together a plan for your future. This show and all shows sponsored by ICCLending.com, the one-stop shop for all your home loans. If you're looking to buy a home or are interested in being refinanced, you can contact my man Andrew. Andrew, go ahead and give me your number.
Well, I mean, I actually want to give, for today, I actually want to give Mr. John's number, you know, because for somebody who has life insurance, people don't understand. This is really important, especially for the minority communities. It's something that, like John said, we're catching on, but it's important for people to understand that life insurance is a must in your financial strategies going forward. So the direct number for John is 415-505-8092. 415-505-8092. So you should give Mr. John a call if you're interested in learning more about getting life insurance. And thank you so much, John. I really appreciate it. We definitely want to have you back so we can break it down even more and actually do some numbers so people can understand the essence of what you're talking about.
Absolutely. I'd love to do that. I just want to say, I think you guys are doing a great job. You know, you're providing some much needed education and inspiration for a lot of people out there that are looking to for ways to improve not only their financial life, but just life in general. You guys are doing a great job. So thanks for having me on.
Appreciate it, Mr. Perrings. KD listeners, we'll see you guys next week.
Hey, do you have valuable information that can help your community?
Okay.
And you'd like to be a guest? Hit us on our social media.
Do it now.
The Tie and Hoodie Show is sponsored by ICCLending.com. For real estate service, please go to ICCLending.com.